So I hope the audio here is good. I'm using my AirPods, so it might sound like a little bit kind of muffled a little, but I'm trying to do just my best to share with you guys this kind of lesson here. When working with Jesse, he asked me, how is it that I know when to enter puts or calls? So I'm about to break down to him how it is I perceive the market to know when to enter puts and when to enter calls. So Jesse, this is all kind of about collecting data and watching how charts are moving. Also being well aware of market sentiment, knowing well aware of where we are in the markets. Are we in a very overbought market or a very oversold market? And this is where you begin to understand when you should be targeting more buy opportunities versus more sell opportunities. For example, you have to be conscious of where we're at in SPY. There's multiple components here. I know the charts are very they grab a lot of attention, but they're a lot less important than you think. When we went from beginning of March to late March at 637, that alone was because of the Iran and Israel war. If you're looking for fair value gaps and just stuck on the charts, you'll never know why it's selling off. Over here was the announcement of the ceasefire early April. And look, since early April, literally a whole month, we went from 640 all the way to damn near 740. It's a whole $100 in the green since in 1 month. This has never happened in history. It's never happened in history. So we're in very treacherous waters. Yes, we are advancing. There's the potential for it to go higher. I agree. But someone in their 60s, 70s is getting ready to retire, and they have those shares up now 400, 500%, 600% of their initial capital. At these levels, a lot of those individuals, maybe they're more active in the markets or less active in the markets, but they're just trying to cash in and live their lives. You have to keep that in mind at these all-time high levels. So near overvalued markets like this, I'm more bearish. Near oversold markets like the Iran and Israel war, I'm more bullish. Now, in this market here, I only knew how to trade calls. When it was overselling, all I wanted was for it to come back up, come back up. Why? Because I didn't know I knew the economic severity of the war due to the rise in oil costs and how the Strait of Hormuz was closed. That was significant. And I was aware of them, but I didn't know how significant. And I was just losing money. In that month alone, I lost $30,000. So going now into April, when things switched on their head so fast, I still was very uneasy until late April. I knew we were officially back in a bull market. But with my experience from March, I wasn't afraid to play puts no more. I was more versatile. I take puts now. I take calls now. Because I understand in certain markets now we have to adapt. And shit, it's been a $30,000 lesson, but I'm glad to be able to share it with you now. So in these bullish markets, you always want to be a little bit more bearish because you want to ride with the people that are cashing in, the people that are paying themselves, the people that just retiring, bro. Those people there's always someone looking to take money out. It's rare for people to buy in. And right now, what's happening, realistically, Jesse, there's a component of this that people aren't factoring in, but the rise in technology and the rise of social media is literally bringing more money to the markets. There's more people becoming conscious that it's a thing. There's more people becoming conscious of which ones to buy, and this is creating a lot of unknown money that previously we didn't have in the early 2000s, previously we didn't have in the late 90s. This is new money. So 2026, 2027, you're getting internet kind of money going into the market just because it's becoming more known. Back in the 2000s, it's a lot harder to find out the stock market even exists, to even know how to even get a broker, know how to navigate it. It's not easy to uncover information. And then which companies do I even buy? That's a whole different topic. So with kind of the world advancing, I do believe SPY has more in her. But knowing that we're on this plateau as well, like I said, these are all environmental factors that you have to be conscious of. Also, The Iran and Israel war isn't necessarily over. It's not like they said, oh, we have a peace treaty signed and everything's good. No, they only said that we have a ceasefire, that we are not going to strike at one another, and that we're going to be trying to work on the Strait of Hormuz to open it back up. They haven't agreed to any terms, and on Monday, I just showed it in my YouTube video, they shot cruise missiles at an American destroyer. And that was like the first act of real aggression, and it happened in the Strait of Hormuz. So Donald Trump and his administration is painting this war as to be somewhat over, but in reality, it's still kind of going. And you have to be conscious of this as well, Jesse. This is what I'm telling you. Like, this is big. Like, this is full time, bro. You have to be putting in the before the market streams, the after the market streams with that guy, because they work. There's another part of this that people aren't looking at. Donald Trump has midterms coming up here in, I think, like November or near fucking June or July. And those midterms, he can literally become impeached. So he's painting this market, doing his best to throw Iran and Israel under the rug for the time being so he could win the people's votes. He's making markets go all the way up. He's trying to manipulate the Federal Reserve by, electing Kevin Warsh. He's doing what he can to make this market go super green to make all the people vote for him. After, nothing's promised. But for now, he has intention behind this. Everything he's doing is strategy to make this market go higher. I swear. But there could be negative variables that we're not including, like that war. If it continues and word gets out again that it's, serious, now we could, there's multiple components that people just throw under the rug. Like, this is one of them. Earlier, we had tariffs. Tariffs haven't, they got dismissed, but people don't even notice now that we have to pay them back. They got declined, so now tariffs have to be sent back out. So where are they going to get this money from? And that's components that people they're forgetting. The Japanese yen carry trade. You have Japanese people or citizens, U.S. investors that would go to Japan, take out loans in the Japanese yen, use that yen to buy assets that are appreciating here in the U.S., and now whatever they're making in percentage, Japan was charging 0% interest, so it was all profit for them. They even went as far as going like negative 3%, where they would pay you to take their money. And now Japan's raising their interest rates, meaning that these U.S. investors have to cash in to pay back their loans. And now there's a lot of money leaving as well. So there's some components to this, Jesse, that you want to get more knowledgeable in to really start making like more confident positions. And with more confident positions, later comes the more profit. You could go scale on maybe bigger contracts. And you combine now the environmental knowledge with, like I said, the visual, the technical. Everything I just said is fundamental. This is now technical. From the bottom up, we're just looking at a chart, right? This happened in March 26th to May 7th. Bro, this is historical moves. This is overvalued, extremely overvalued. So now that I know that we're in extreme overvalued territory, every time that I see a top, I'm looking to enter puts. Now, will I get them right every single time? Maybe not. So this is how I navigate it. First, I wait. So if I see an oversold scenario, I will look for calls once I see the support catch. The support could catch, I would enter calls, and I know that at this line previously at open, we had a resistance. Boom, she hit, came down. Over here, I knew that once I approach even near this line, if I start seeing selling pressure, I should just take my profits. Pay yourself early. Options is the most rewarding when you pay yourself early in the quick successions, because then you incorporate theta if you go too long out. But of course, there is very high reward in holding these positions out. For example, if you would have been in puts way down here and you went negative 100% when she's up here, look at what happened. At 9 a.m., holy fuck, I'm back in the money, Jerry. I'm back. Oh shit, Jerry. I'm plus 70%, I'm plus 80%. Yo, I just did 140% when I was negative 100. and that's because of the market's volatility. But the only reason that happened is because we went for new all-time highs. There's always someone looking to pull their profits, someone to pay themselves when it's sweet, when it's at the absolute top. And you've seen that today. And this isn't a one size fits all scenario. Like, you can't necessarily always look at this like universally. So what you can do to look at things universally, right? Because the environments can change in the future. This is only for the now. We wouldn't have this conversation in March because it would be a different market, different environment. So now, what's universal about this, Sherry? What can I use about this that can help me find more consistency in my profits? Well, for one, is waiting. You could wait to collect data. Yeah, I enter very early because I know, hey, at 7:33, like my positions today, I believe I had Microsoft. I had Microsoft puts, okay, and I entered these puts one because I know that Microsoft has been very overvalued. Now, yes, this is pretty far out to say, yeah, April 13th, 370, literally less than a week ago, she was at 370, now she's at 430. That's overvalued in her own from the bigger picture, but just looking at her on the smaller frame, just looking at this so much aggressive buying here at the beginning of the market. Look at that. Coming off of even after hours, just green, 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 green. Look at that mountain of green. And then she had to give out. It's the only logical thing. Look at that. How much green that is. You're talking about 414 up to 427 in less than 4 a.m. to 6 a.m. 2 hours. Some companies don't even make those price movements in a whole month. So, holy crap. It's an overbought scenario. Well, let's let Microsoft do its thing. Boom, boom, boom. She's catching a top, literally at the very top. I imagine that at 428, which I believe she hit, or if not got near, 428, that would be resistance, just because it's the next whole number up. And I knew that that was previously, if I go over here, the ceiling where she's always been hitting. Up here, hit rejected. Let me bring this board for more visual. Look at this. 428 rejected, above 428 rejected, 428 rejected. We went above for damn near all-time highs, 433, not all-time highs, but the highest it's been in a couple months, rejected. So I'm aware that at this level up here near 428, 430, there's high sellers. She's not going to make it too much higher than that. So I'm using past technicals, and I'm also using my knowledge of, where this company is at coming off of this aggressive buying. And now I know to time my puts at 428. Fuck it, I'll take the risk. I'll take the opportunity. I might be wrong. Maybe she does go for 430. But will she go much higher? And even then, that's where you manage risk as well. If you see this thing rip above 430 and now you have new all-time highs, and you can also use SPY as a reference. Using SPY as a reference to know, oh shit. SPY, let's say, can I move this? SPY, let's say, was printing green, which it was. But SPY started going red, but Microsoft was going green. Well, maybe later on in the day, Microsoft will fall red too. And that's how I use them as references for short-term price movements. Because this is short-term. This happened. I went in 641. I exited at 649. In 8 minutes, I went ahead and made this position right here. In 8 minutes, I closed my Microsoft this morning. Why is it doing that? Come on. In 8 minutes, I went ahead and closed that put for 35%, 177. And I closed it short. I was supposed to fill these contracts for 230. I closed them for 224. But now, that's essentially how I entered those puts with that visual, I guess it's more knowledge and experience, right? Like, shit, I've made countless mistakes where I entered puts there and it goes above. That's where you incorporate risk management, Jesse, because you will be wrong. Losses will be included. They are a part of the game, but manage them correctly. How do I manage my losses a bit more? Well, Maybe just entering one or two contracts, building up that confidence first, making sure I have 5, 6, 7 winning trades in a row before I even think about going for two contracts. And then secondly, hey, if I am now minimizing the capital risk, let me go ahead and make sure that when I do go negative on my positions, I'm conscious. Hey, Jesse, if you entered here on these puts and at 633 you went negative 100%, bro, doesn't mean you just sell. Yeah, potentially you could, but you're already at 100%. You're already at negative 80. You have now 6:42 a.m. Let's round it up to 7. Fuck it. You have 8, 9, 10, 11, 12. You have 5 hours left for it to potentially come back lower. And shit, I don't know if it did, but it eventually did come back lower. And boom, you would have, you don't have to hold that long. I'm not telling you build this habit of diamond handing your positions, but if it's early in the market and you get it wrong, keep your eyes open to maybe exiting for less of a loss, or, I don't even want to introduce dollar cost averaging yet, because I feel like that could lead to a different pattern of mistakes and very expensive errors that I wouldn't want you to experience this early yet. So just learn to perfect the stop loss a little bit, and later on we'll learn how to incorporate dollar cost averaging. But does that kind of make a little bit more sense to you in terms of now the whole fundamental picture, the whole technical picture, and knowing how to spot these levels? Correct. Yeah, that's very helpful too, because you have to be conscious of this as well, Jesse. Let's look at Microsoft. Look at Microsoft. Why isn't this frame working, bro? There. Look at Microsoft right here. She went ahead and opened up. We have this big range, right? But in this range, if we want to go ahead and clear everything out, a range is consolidation. These ceilings and this roof, that's your range. All right? So, near here, you have these support and you have your resistance. You can see this already by now 7:40 a.m. You have your ceilings, you have your floors. All right? But now, this is the bigger picture, right? Jesse, only fuck me. I don't know if you fucking want to, but the 1 minute time frame has always worked for me. It's the only way I trade. If I'm in a shithole, I'll go look at the 15 minute, the 1 hour. Why? Because I want to see how these candles are forming. What do I mean by this? When a candle is green, like let's say like this one, she went up, that was the high. Wicks are always the high and the low. On a green candle, the open is at the bottom and the close is at the top. So she opened down here, boom, wicked all the way up. Sellers absorbed that selling, brought her back lower. That's my sign for puts. 416 down to 413. But just looking at these closes, knowing where the high was at, and that sellers came out on the bigger picture, which is now the 15 minute, I look for these sellings sometimes, but that's only in my worst case scenarios, because most of the times I'm over here focused on when is she breaking this resistance, which I guarantee is that similar wick down right here. But now, this is zoomed out a little. Well, now when you go even closer, Jesse, you'll see another level. And things kind of shape up a little differently. Oh shit. Now you can kind of see there's a little bit of a support here, and then there's a little bit of a demand over here. You see the top? Let me go ahead and bring this up for you. Hit, came down, got in this area, hit, came down, got in this area, hit, came down, hit, came down. All right? Now you have your resistance. That's your demand. That's your ceiling, by the way. Then you have your demand. Oh, no, your resistance. Look, hit, came down, hit, came down. Okay, I got confirmation right here. There's selling pressure right here at this level. All right? Now, I know that at this bottom, hey, I got confirmation now that there's buying at this level. But look, that selling is still pretty strong. She just didn't get all the way down there now. So, boom, boom, boom. Hey, I got confirmation that at this level there's buying 2 times already. Don't count it down to the numbers. Don't say, oh, because I seen it 2 times. bro, sometimes you just gotta take the chance. You just gotta, you've seen it once or twice, you know, if SPY's holding up nicely too, send it. Just try it. You're gonna fail, you're gonna get it right, but just try it. But when you fail, if this thing goes ahead and rips down now, bro, like from 423 below this level over here, like this level right here at 421 that she was holding to jump up off of, if she goes below it, cut your losses, you know? And that's how you kind of manage your entry. You got the confirmation here on the buy side at the bottom. Boom, boom, boom. I'm going to take profit. No, I'm going to enter the calls. But look, I'm aware that at this level, they're selling. So at this level, I'm going to want to cash in. And now I'm just looking at the visuals. Where is price reacting on the buy side? Oh, it's around here, this line. Why don't I put my lines all the way down here? Because I want it compacted. I want it to be semi more realistic. You know what I mean? Do you see this though? Am I like speaking caveman, or does this really make sense, bro? Yeah, you have to construct it just a little bit, but oftentimes, bro, like I said, man, you're gonna enter around these levels. You could go long right here, bro. Literally, you could say she hit this line. I got my confirmation. You go negative right there, maybe 20, 30%, maybe even 40, 50%. But if she goes below here, fuck, take the loss. Just take the loss and leave with the remaining 30% of the position. But if she goes down here and she holds, you know, somewhat near this buy level here, where these guys were at, you know, slightly lower, don't give her too much change. Look at the last buy level, which was back here, where she hit and came up. If she goes ahead and holds that still, hey, maybe that's where you want to hold this position a little longer in case it could come up for less of a loss instead of the full loss. And then, hey, instead of maybe losing 70, 80% of the position, you only lost 75 or 60% of the position. And then just take the loss, you know? But if it does work in your favor, hey, know when to take profits. Oh, damn, I know that at this level right here, there's sellers. All right, let me not be too greedy. Boom, right there. 735 to 750. 15 minutes, bro. You made roughly 40%, 30%, and that's being kind of conservative. 40%, bro, you put in, what, 300 bucks? You just made 120 bucks in 15 minutes, and that's super low capital. Like, once you scale up your money, bro, you can easily swing 1,000 on something like that because you have a maybe 20,000, 30,000 portfolio, and now in those 15 minutes, hey, it's scaled so much from 120 bucks to now 400, 500 in 15 minutes. That's insane. And that's why you practice on this craft with just one or two contracts. Get comfortable, build that confidence, build that, hey, I got it right. I know how to manage my stop losses. I know how to sell a position when I'm wrong with one contract. Build up that confidence, that experience, and then maybe, you know, I give it month one or month two, month three, try 2 to 3 contracts, 4 contracts. But right now, really just focus on the craft and building the familiarity with these companies so you're well aware of, you know, are they at all-time highs? What's the fundamentals? What narratives are going around? The Israel-Iran war. SPY is only this high because NVIDIA is reaching 212, going for damn near all-time highs again. She was at all-time highs last earnings season. Right there. Let me move this real quick. At 218. She's going for that again. Why? Because AMD recently went up for 421, higher, even like 440, I think, after hours. 431, all-time highs. AMD and NVIDIA single-handedly holding up SPY right now. And that's, you know, fundamental knowledge. That's more in-depth. That's more, you know, like, you mix that in with the technicals, and then it becomes more clear. But, you know, with all of that, Jesse, I don't want you to think you're going to be a bulletproof man. You still can lose, bro. But it's just about, like I said, managing risk on the capital exposure, learning to be wrong, you know. There's been times like, and then overcoming when you act on one decision and it does the exact opposite. You know, let's say you take a stop loss and it goes for fucking all-time highs after that. That's happened to me twice this month. Last month I missed out on a position of 20,000, and then no, last week I missed out on a position of 20,000, and then this week I missed out on a position that did 4,000. And yeah, bro, absolutely like horrible, but sometimes sticking to the rules keeps you alive to trade another day, you know? And you see it here, bro. Every single day is a brand new opportunity for you to do something big. You just gotta live to do it another day, even if you get it wrong. Literally every day, someone goes from zero to hero in the stock market. I guarantee it. Bro, if you would have full ported some puts, like let's say a 730 put, at a high of 736 right there, bro, you just clear like 700%. What the fuck, bro? You do that with 20 grand, you just made fucking, I think 2.1 mil. I'm not mistaken. I think I overshot that. 20 grand times 7, it'd be 140,000. In one day. That's what I did with Tesla. I did 400% on 27,000. That's how I made 116K in 3 hours. You could literally go from zero to hero in the stock market. But shit comes with a lot of ass whoopings, bro. A lot of lessons. You just seen that guy in the chat, Anthony, sent minus 30K P&L to the chat. That's the type of money you could lose, but it's also the type of money you can make. But Anthony, his specific situation was far before he started trading with me. He was already in the whole negative 20, negative like 18K, 25K, because he was just experimenting by himself, but he has the money to experiment. He's not afraid, and he has the money and he has the balls, really. A lot of people I know can have 8K and the last thing they'll think about is putting it into the stock market. He had the 8K and had the balls, but he just burnt himself out too soon, too heavy, without much guidance. And it was because I wasn't aware he was playing that much capital. I'm not aware what all of. I know your guys' financial situations. Anthony in specific, I didn't do one, but I am aware that, a lot of the numbers are pretty fair. But there's people out there that got savings. There's people out there that, have an extra good month in their businesses and they have 5,000 to just, I'm ready to go big. And if they lose that, I'm unaware of that, But that's why I tell you guys, like, sticking to, like, really learning this craft with a lot less capital. I wish I could have caught Anthony much before the minus 30K, so I could have helped him recover maybe minus 10K, with 20K in capital to do that. That's pretty obtainable. And that's where, like, shit, there's a good side to this, Jesse, but you got to be prepared for the bad and know how to avoid it, and also literally live to see another trading day, bro. Always keep that as your mantra. But was I able to help you? Was I able to help you a little bit, though? Do you feel better? Yeah. Mm-hmm. There's different components to it, Jesse, and it's difficult for me, like, sometimes as the teacher, because everyone sees them differently. It's crazy. So many different unique perspectives, different perceptions. People think something's going to happen because of this. And I'm only sharing mine. Of course, mine is very subjective, but I don't know. I feel like I'm a bit more experienced, And I try to just clarify things so you guys can, hopefully play them the right way or have like the rule break. Things like there's certain rules, bro. Like in blackjack, you're not supposed to hit on a 11, or no, you're not supposed to hit on a 19. You know, it's certain like little guidelines you could follow to help avoid certain critical errors. And I don't know, I just try to transfer them into you guys to help. But Jesse, how's your experience been here working with us so far? Like, I know you're probably in like month 2 already. How do you feel everything? Do you feel it like helpful? Like, how do you enjoy it? Yeah. Mhm. Mhm. That's good, man. In terms of like your improvements as like you're a trader and your experience level, like how do you feel on that? Okay, good. Good. Yeah. Mhm. Exactly. And in terms of like Jesse, the support system here in the chat, like, how do you feel like I've been there for you as like um, like kind of like someone helping you learn all this stuff, an educator. Like, do you think that working with me has been worth it so far? And how do you like kind of rate or not rate, but like you know, how would you say like my experience working with me is like, what would you have anything to say about it? Yeah. Yeah. Yeah, good. Yes, for sure being in this environment too, you know. Yeah, that's good, bro. Cause like, yeah, especially being here with us, like you'll see the type of money that guys are making, and you'll know like, yo, bro. Also, the type of money we're losing, you know that, yo, like, there's always a bigger shark. You know, we gotta push each other to at least try it. Mhm. Nice. Mhm. That's good, bro. That you're not afraid of, that you see things like that. Like, there's no such thing as a dumb question, bro. There's a very good quote I remember. It says, "He who never asks is a fool for life. He who asks is only a fool for the moment." And that shit's amazing, bro. Hell yeah, it's true. So like, never feel like there is any dumb questions. Like anything I can help. Like I said, bro. Like we literally just jumped in a 34-minute call, and bro, I'm in no rush. Like you have all my time of day. Just reach out to me. Let me know how you're doing, and I'll always be here, bro. Yeah, I got you, Jesse. But other than that, man, we're okay to wrap it up here. Anything you want to cover, or you're good? Yeah. Most definitely not. You have some odds in your favor. You have some odds in your favor in terms of over here with Nvidia still sitting at 211. So she looks like she's wanting to hold this level here, like at 213, and she could push back up. What's your expiration like tomorrow? Oh yeah, you gotta get on your knees, pal. You need to get you gotta get AMD to push back up. Which she looks like she's following the trend. She might look pretty healthy. She's gotta reclaim this up like above 410 range. Let's see, Google on her way down. I think Amazon has to reclaim her throne too. She got hit pretty hard today. If Amazon can reclaim some like traction up here to 274 tomorrow, you could be all right. I think Meta took a hit as well. Meta holding up pretty good though. She didn't lose that much. She was at five something at the start of the week. Now she's at like yeah, but she could come back up. Microsoft, did she get hit hard? Microsoft holding it up pretty high. You just need the other guys to come up. So hopefully SPY, because SPY is a collective of all of them, right? Let me see. Damn, Tesla's on one. No, sort of, yes, but QQQ is the ultimate tech index. That shit's insane. But for the most part, yeah, if she loses 730 tomorrow, I would just cut the position. But if she opens up pre-market pretty strong, if as long as AMD and Nvidia can hold those levels up, you'll be all right. But we'll follow up tomorrow. I hope you navigate it, bro. We'll go through it together. All right, then, Jesse. I hope you have a good day, bro. Thanks for, pulling up, and anything you ever need help with, bro, just let me know. All right, then, Jesse. You be safe, bro. Later, man.